In this video, I'm going to be showing you very quickly how to go about trading the news with a step-by-step guide. I want you to pay close attention to what I'm going to be discussing with you. In fact, I'm going to be using a live trade, for this particular tutorial video, and I want you to follow me step by step. It's very easy. A lot of people they have traded the news and they have blown their accounts. This is probably because they are approaching trading news, from a gambler's point of view. I'm going to show you the professional, step-by-step, easy way to trade the news in the forex market and make consistent profit for yourself. And this is one of the framework of our trading models at Potential Miners International. We have three different trading models. We have the project model, we have the investment model, and we have the cash flow trading model. Now, the cash flow trading model, we have two different frameworks, and one of the frameworks for the cash flow trading model is the news release framework. And I'm going to be using this framework with a live example of a particular news data on prelim GDP quarter-on-quarter release as at 1:30 p.m. today, 28th of August 2025, to explain to you how to go about the step-by-step way of trading the financial market, the forex market, especially following news data. So let's go straight into the tutorial. You see, today, 28th, like I said, today is a Thursday, 28th of August 2025, and the news that I traded, I just entered the trade not quite long, and I feel let me use this particular trade to explain. Given the fact that the trade has just picked me, we don't know the outcome of the trade yet, so it's more or less like we are using a live trade example to explain our news release framework of trading the financial market based on news data. So now the data is for US dollars, and we are looking at majorly our consideration is for this prelim GDP quarter on quarter. You see it now. No, so the previous data or data percent was 3.0. Now the forecast happened to be 3.1. So by the time the data was released, we noticed that there was a sharp increase from 3.0 to 3.3, but most importantly, the actual data release is far above that of the forecast. That is what now makes it tradable for us. So what we do is when we look at this data set, we now ask ourselves, what is the implication of this data set for the currency of interest, which is USD? Before we now go ahead to look at which currency are we going to pair with USD. Now, to start with, the data set for GDP quarter on quarter to have grown from 3.0 previous compared to the actual now to 3.3, it means that US dollar is going to be gaining more strength looking forward. And of course, when we compare the forecast, which is 3.1, with the actual, it means that even investors or analysts, their projection of the growth of the United States, the actual of the growth now, the actual experience or the real outlook of the economy is better than the forecast. So by implication, we expect that dollar is going to gain more strength. Now, this might not necessarily mean on a very long term, as it were, because other things might add up, to decide the long run, direction or trajectory of US dollar. But let's say on an intermediate term, we are looking at the possibility of if the GDP has grown based on data, we expect US dollar to perform better in terms of the price. So the next question is, what currency are we to compare or are we to pair with US dollar? So that is what will now take us into what is the fundamental storyline and the sentiment storyline for each of the other seven major currencies. So that we will need to now see which one can we pair with US dollar. So we pick JPY as our currency of interest. I might not need to go into details of how we shortlist that. And of course, I'm going to release a separate video where I'm going to explain how to track the risk sentiment of the market per time, and so that you can know the projection of the price of each of the currencies. So JPY, as of now, we expect that since the market sentiment as of today 28th of August 2025, based on our analysis, and of course I've said it over and over on this channel that we have the most robust analysis when it comes to fundamental and sentiment analysis ever that you can ever come across, on especially on the internet. That our analysis shows that the risk sentiment of the market as of today, Thursday 28th of August 2025, is risk on dollar aversion sentiment. I will probably release video where I'm going to explain the four different types of risk sentiment overview. Risk sentiment overview. So our analysis shows that the risk sentiment overview is risk on dollar aversion. So now that GDP for dollar increased beyond the forecast, it means that, of course, when there is risk on, currency is expected to flow from currency of, or capital, I beg your pardon, is expected to flow from currency of low yield to currency of high yield. Now that we now know that, it means that JPY, as it were, that holds interest rate of 0.5, capital is expected to be flowing predominantly away from JPY. Now, we have risk on dollar aversion sentiment in the market. Now that dollar is now having a GDP that is beyond the projection, the forecast, and of course it increased from 3.0 to 3.3. We expect that dollar will gain strength, given the fact that more money will be pumped into the market by the virtue of paying those people that engage in the production process, and that will lead to increase in inflation. And of course, when there is more money in the hands of people, of course that's the mechanism, it will lead to increase in inflation. And when increase in inflation happens, it might lead to interest rate being hiked. And of course, currency will always go up whenever there is hike in interest rate, because of course investors want to put their money where there is higher interest rate. That's just the storyline. And of course, this video is not I'm not trying to explain the storyline of the fundamental and risk sentiment. What I'm focusing on is how do we pick trade now. So I just took my time to explain, why and what are we looking out for, and why do we pick JPY as our currency of interest. So now let's go straight into the chart. How do I go about, or how do we go about picking trade with this data? Now I want you to follow me very closely. This is very important. This is what you have been waiting for. And of course, the news was released around 1:30 p.m. And of course, Nigeria time, that means around 1:30. This is 13.30. That is 1:30. Now, what we do usually is we don't want to jump into the market, because we are not gamblers. We are data analysts, and we use the information that data gives us to position for profitability in the market. That's what we do. And of course, we expect that when data is released, the market is going to react. So we give the market a clearance of 10 to 15 minutes. Let the data pricing into the market. Let's see how investors they are going to react. And of course, we gave the market 10 minutes from 1:30, 1:35, 1:40. It's around that 1:40, 1:45 that we will begin to look out for either of any of these three things. Is either you are looking out for a fair value gap created by the pricing in of the data set that was released, or you are looking out for an order block, or you are looking out for an engulfing move. So after 145, 150, around 150, we noticed that the market was able to create an engulfing move. Look at this now very closely. Pay close attention because this is still a live trade. In fact, the price is still within the entry position. We don't know what the outcome, will look like. And of course, our focus is to have a trading rules and apply our trading rule to any currency pair or asset that we will be picking trade on at any point in time. The outcome of the trade, we don't know. We cannot control that. All right, so this happens to be our area of emphasis now. Area of emphasis. Look at this now. Area of emphasis. Now, usually what we do and what I've done on this trade is that we position our trade slightly below the high of the area of emphasis, or you can call it entry box. Entry box is still the same thing in this context now. Now, we position our trade slightly below the high of that entry box. Then our stop loss is right there below that entry box. And this was how I picked the trade. In fact, we usually do what we call preliminary analysis, and of course, before the release of the news, we ascertain what our stop loss will look like. And our analysis shows that our stop loss should be 16 pips, and that was what we did. And of course, we are projecting for risk to reward of 1 to 3. You see that now. We pick the trade, after creating this engulfing move, came back to pick us, and of course, in fact, it was almost stopping us out, but no panic because the most important thing is that we are expected to apply our trading rules and wait for the market to decide what the outcome will look like. Of course, that the trade has picked us, come down, almost stopping us out and is here now does not mean that this trade is going to be a winning trade. Anything can still happen, but then we have applied our trading rule. This is how we trade at Po ten tial Miners International without emotion. You are not expected to put emotion on this. Once you set your entry parameters based on your rules, leave the market to perform its magic. In fact, I did a video yesterday where we picked a particular trade on gold using our we used our cash flow money box model. As at that yesterday that I was doing the video, the market was around this place. You see, this was the trade and it has actually delivered ratio 1 to 3. As at the time I was doing the video, the market was around this place. And I said it that the outcome of this one trade is not what will determine whether we are profitable or not profitable. What we usually preach at Po ten tial Miners International is you are expected to divide whatever capital you have. Suppose you are an aggressive trader, aggressive trader now, I beg your pardon, and you want to really expose yourself to risk in the market, you are expected to divide your capital into 20, which means that the maximum percent of your capital that you can risk on one trade will be 5%. So for cash flow money box trading framework, we recommend that since we are using this as a cash flow, for traders to make money within the week, within the day, you can use 5% of your account. And of course, as at the time I was in that video, the trade was at this point, and of course, before the day, I think it was this morning or this afternoon or thereabout that this trade eventually cashed out at ratio 1 to 3. So by implication, the same way the outcome of this trade Now we use our news framework or news release framework to pick this trade now. The outcome of this trade we don't know, but what we are certain about is that we have followed all our trading rules as if we are a robot. You see that now. There's no emotion, we don't panic, whatever the trade deliver, is up to the market. But then our own is to trade by the rules. And this is the step-by-step guide to trading news in the forex market. You don't want to be gambling, with the news data. Just imagine you have entered here, say you bought, it would have, went up and it will come down to probably stop you out, and it's always very volatile. So we give the market clearance of 10 to 15 minutes, let the data price in, then we now enter the market if we see our trading condition. This is how you can trade the forex market, and you make consistent profit day in day out, week in week out, month in month out. And of course, it means that you will not eventually now be frustrated to say that forex is a scam or forex is not working. I want you to stay glued to this channel. This is just the beginning of the journey for us as Po ten tial miners international, and we have the mind to be dishing out quality informative videos or tutorials that will really help people to gain stability and consistency in trading the financial market. Until I see you in the next video, I remain Mr. Akimbo, the king of waves. Thanks for listening. God bless you.